Our special coverage continues right here on NDTV Profit. We're speaking now with Vikas Khemani, founder of Carnelian Asset Management and Advisors. Vikas, welcome to the show. And, I was recalling our conversation before the elections on what could really change. That was the week when there was so much uncertainty in the market. On hindsight, assuming that the exit polls are in the right direction, one wonders what was causing that uncertainty. Question is, how do you see the rally going forward?
I think, whenever this kind of events are there, now the big uncertainty is over. So, I would say after initial reactions of 1 or 2 days, which partly we have seen today and partly we might see tomorrow, I think things will come back to normalcy and then we get back to the normal business of looking at the earning cycle and liquidity. So, of course, this is a very, very big vote for continuity, which is what market was looking for. If you see today's letter of Prime Minister Modi is exceptionally well written, like a CEO, which kind of gives the new direction to the whole company or the country in this case, where he is chalking out that, we need to focus on speed, scale, standards and scope. These are the four things and four pillars on everything what we have seen. So obviously he's a visionary in sort of man, and he is driving towards the country towards a very, very a glorious future. And I think so to that extent, the direction and long-term direction of the economy and markets continue to remain very, very positive and bullish. However, in medium and short term, a lot of things play out in the markets, sentiment to news flows, and one has to kind of they will be there. So the way I would think is that, the bullish bull market or the economic growth cycle, or I call it Indian economic miracle, continues on its journey with this vote for continuity. And in times to come, I see a very, very bright future and one of the best wealth creation cycle, what I call Indian economic miracle.
Because you're not restricting this to the next 5 years. I'm guessing saying it for a longer term. Thanks for joining in, Neeraj here, of course. Good morning. So that's one question. It's not just the 5-year term that you're talking about, but slightly beyond. And would you reckon that the way to play this is not by betting for the short and the medium term, but the slightly longer term?
Absolutely, Neeraj. And I think in all our past interactions also, I have said, continue to believe that, we are in one of the best wealth creation cycle over next 20 years. And I have never been doubting the, continuity of the current government. I do believe that even in 29, this government will continue. For the simple reason is that, for anybody to lose government, you have to mess up very significantly, or your opposition had to have a very significant value proposition. And I think both in this case are missing. Which same, I think, argument I had, 2 months ago, 1 month ago, whenever this question came about, like it took 70 years for Congress to mess up for somebody else to come and challenge. Same thing, I think, in my opinion, I see continuity of this government for next 10, 20 years. And if that is the case, then I think, A, you will have continuity. B, I guess, once the momentum builds in your favor, then I think it is very hard to kind of reverse very quickly. So at least I see 5-10 years of till 2035. I see a reasonably good period ahead of us, and in fact, I believe it's a great cycle of growth.
Right. Because do you feel like the next couple of years the story will remain with the broader markets, or do you think the leadership will once again shift to the large cap stocks?
These two things do keep happening, and if you look at short-term cycles, there will be periods when mid and small cap will do, there will be periods when large caps will do. But if you look at a 10-year cycle, of course, all caps will do well, but mid and small cap tend to outperform large cap just because of the sheer base effect. And plus, whenever the economic transformation happens, new segments emerge, and they tend to emerge more from mid and small cap than large cap. For example, I think we have seen manufacturing also happening in the country over the last couple of years, and we are seeing many mid and small cap are kind of growing fast, and they will become the future large caps. So in that sense, this transitionary phase of or transformative phase of economy will create many segments and sectors which were not large earlier. Like happened in case of mid-90s, IT and banking became very large in 20-year period. Same way this cycle will have those. So, mid and small cap tend to kind of create slightly larger value in a transformative phase of economy which lasts 8-10 years.
What is the theme, though, that you see? You talked about IT, in the last few years, Vikas. What is the primary theme that you see over here? And is it more of a consumer premiumization kind of play? Do you see a digital infrastructure taking the forefront? What are the exciting spots where you see more value and growth come in?
Way we see is we divide the whole opportunity space into five broad buckets: banking and financial services, manufacturing, services, consumption, and infrastructure. And the beauty of the current economic transformation is that each of these bucket has huge opportunities. Now, within those buckets, there will be some fast growing segments, there will be some growing which are kind of stable growing segments. So you got to kind of have a balance of both, according to me. Manufacturing, we have spoken about many times, that is one of the best wealth creation opportunities ahead of us, similar to what when IT was in mid 90s. So within that, you will have many segments, sub-segments which will come about. Within consumption, no doubt that premiumization is a theme, which is, and whenever any economy's per capita income goes from $2,500 to 17, $18,000, people consume more new and better, depending on each class of the household income. And India will see same thing happening. Luxury India has not even started, in my opinion. We will see luxury becoming scale in next 8, 10, 15 years. So I think a lot of themes, new ideas will emerge. Experience-based consumption, likes of tour and travel, and we haven't seen yet becoming large in scale. We will see many, many opportunities around that. So this is a huge opportunity space. One got to look at, which are the high growth area, which are the stable growth area. But each of these five baskets will have a huge growth.
Okay. Vikas, stay on. We're joined by Atul Suri, CEO of Marathon Trends as well, with us, along with Vikas Khemani. And Atul, great having you. Great to have both of you talking about this. Vikas is talking about betting for the long term. This next 5 years is probably not it. The best wealth creation opportunity in front of us. I would love to understand from you, how are you thinking about this possible verdict and how to invest into something like this?
Hi, Neeraj. Hi, Vikas. Nice day to be on there.
I agree completely. Great to have both of you.
Yeah, I know. So
Atul
yeah,
is
I
bigger too
guess I
than me.
agree that I think it's phenomenal. Continuity is amazing always for markets. And if you look at the world politics, you'll realize that very few countries, hardly if anybody, has this kind of political continuity. If you look at the countries like the US, you really don't know which president to choose from. UK is turning around. So all over the world, you realize that one thing that is missing is political continuity. And India hopefully not only has it for the next 5 years, that would make it 15 years, but more than that. So I agree that we are actually quite lucky that we are at a time and place as investors where there is political continuity. And having been in the markets for 30 years, I've seen how things have turned around. And that sooner or later also has an impact on markets. As I look at it, I find that apart from the day or two movement, which is mainly because of short covering and various positions people have in the F&O space, I think that what's interesting for me is the agenda for the next 125 days. I think Mr. Modi has been really speaking a lot about it. In fact, he chaired a meeting yesterday also. So I would really look at it seriously. Of course, the market's already betting on some themes, but from what I take away are the 4 or 5 big themes that he is betting for the next 5 years. And that for me as an investor will be an opportunity. One is that I think there are some PSU divestments or some deals that have been stuck, especially in the PSU bank space. So I find that PSU banks will continue to have an opportunity. As unwinding happens, a lot of other stocks also get re-rated. So I think PSU banks would be one area which would be very interesting. Second is electrical vehicles and mobility. I think that is something which the document is going to focus on. We are going to see a lot of policy initiatives there. Of course, the cherry would be if Tesla, which has postponed till after elections, may come in. So you never know. That could actually give a very big trigger to the sector or the sentiment that is playing out. I think e-commerce is also an area which requires certain clarification, the area of taxation, etc. That's going to be a very big wealth creating sector, as we all know it. We are big consumers of it. I think that will be the third area where I think there will be some initiatives in the next 125 days. I think digitization of land records. If you look at it in India, real estate, what is really holding it back is a lot of title issues. there's a lot of problem. And for the real estate sector, this could be honestly what
I'll take one
demonetization
minute.
did to the
Right,
financials.
right.
So I think these are the themes that I feel I would really play out for. And that's where I see action in the next 125 days.
Atul, I mean, you called this before most. At the end of this year, early end of last year, you talked about how the markets could be looking at a 15 to 20% upside. We're getting close to that from the way things are moving. Would you, now that this event will largely be behind us in 24 hours, would you go back and rejig your portfolio? Would you take a cash call at this stage? We are an expensive market for whatever it's worth. For all arguments for the market, Vikas is very aggressively nodding his head saying,
And Atul is
I am
laughing.
not taking a cash call.
I'm laughing actually.
So that question
Second, I
stands
can
for
see
both
Vikas
of you.
nodding and I'm laughing. So I guess both the reactions
So,
are the
okay,
same.
yeah. So no cash calls, 100% invested at this stage. Atul, you go first. Vikas, you go after.
No, I see. I'll tell you, in the larger scheme of things, Samina, what's going to happen is all these cash calls are always going to hurt you. You may look smart and pretty at one point in time, but the next time when you get hurt, like if you take a very big cash call pre-election, you realize that today you're chasing a lot of these stocks 5-7% higher, and it's very difficult as a portfolio manager to really catch up with that kind of underperformance. It leads to immense amount of pressures. So I don't think at this time you need to be a hero and take big cash calls. But now speaking beyond just the elections, what I feel is that if you look at it rally globally in equities is phenomenal. Yes, we are having a good time in India, but if you look at the bigger story that is playing out, that actually you'll find that it's a global equity rally that is happening. And this is also very good because we cannot work in an environment where there is a hostility to that asset class globally. If you look at US, if you look at UK, you look at all European markets, if you look at Japan, all are pushing towards lifetime highs or near lifetime highs. Barring China, I think 90% of equity markets globally are at near lifetime highs. And I guess that itself is a very big contributor. Yes, India would stand out because, as I said, political continuity, a certain market-friendly government, etc., etc. But I feel that even looking beyond just Indian equities or Indian markets or Indian politics, even the world equities are giving you that kind of surge. So I continue to remain very optimistic. Yes, corrections will come. Yes, we will look stupid on some days, but that's okay. I mean, we've spent so many years in the market and look so stupid at times. But in the long run, the wealth has been created by keeping the faith in India. And I do think that we are at a time and space where it's I think it's never looked better than what it is right now.
Vikas's answer to the valuation question.
And the cash call.
And the valuation naysayers and the cash call, Vikas, because you vociferously, nodded your head. And that's the constant question, isn't it? That is this now an expensive market?
First of all, this is again, I would say, media narrative getting created that, markets are very expensive all the time, and I think let me answer slightly longer way. See, valuation of any asset class is, and I think biggest argument is that yesterday it was trading at 18 times P, today it is 22, 23 times, hence it is expensive. That is the biggest argument. But one has to understand what goes into valuation. There are only three things which goes into valuation: yield, growth in yield, and discounting rate, right? And same is case with equities. Of any asset class, the same is case with equity. In case of equity, yield is ROE, which is one of the best in the world and one of the best in India, right? At around 15-16% level. Secondly, if you see growth in earning, most pessimist person will tell you 15%, optimist person will tell you 20%. Range is somewhere in between. Which are the markets, how many markets grow at this pace can and sustainably for a long period of time. And especially these kind of continuity changes which happens, I think you only see acceleration happening in that, not the deceleration. Thirdly, discounting rate, which in turn is a function of two things: risk-free rate and risk premium. Now, risk-free rate, India's risk-free rate is one of the lowest in if you compare the difference between 10-year US and 10-year India, 1.5% is lowest ever, right? Our risk premiums are coming down as more and more people, and with this kind of, again, outcomes only comes down. So just again, to give you an idea, everything else remaining same, 2% drop in the discounting rate increases equity valuation by 35% approximately. Now, if this is the case, now you can see whether markets are expensive or not. In fact, I have a very strong thesis that Indian equity markets, will trade even expensive from here. And just to give you another sort of similar comparison, when Japan went through a 25-year bull run, which peaked in 1989, at the peak of the market in 1989, Nikkei traded at 60 times P. And Japanese market was 40% of the world global market cap. So, I mean, if your market is one of the best market around happening in the world, that's when I keep on calling again Indian economic miracle. That this is the great journey India is embarking on, going towards developed nation. India will become $40 trillion GDP or 35, that we will see. But I'm saying the journey of accelerated growth over next 10, 15 years looks pretty feasible. If that is the case, then I think, in my opinion, world will not be able to ignore. So combination of earnings growth and liquidity both will keep on re-rating the market is my strong hypothesis. Hence, I keep on telling people when you guys call it expensive market, a lot of people get scared and that impacts their asset allocation. Yes, short term, like Atul was saying, market might correct, possibly. That will happen, that has happened in the past, will happen in the past. But from a long-term asset allocation perspective, I don't think Indian markets are expensive and one should continue to remain invested into Indian equities.
Defense, Vikas, we call people, the people give the answer about whether it's expensive or cheap. So I'm glad that we got the two best men to talk about this answer today. That will be the narrative from Vikas Khemani and Atul Suri, at least, that this market is not expensive.
And I think it's a more specific question, right? For every stock, every company, every price valuation. Of course, when you come to Indian markets overall, then the upside is something that has been underestimated by the world.
Yeah, but also this whole idea of 22 times is India more expensive than the rest of the world. Sure, it may look that, but the earnings growth is kind of fructifying for that. But, I understand we've run our time out with the guys. Atul Suri at 5 minutes, Vikas gave us 10. Lovely having both of you today. Thank you so much. Atul, I look forward to the longer term conversation with you as well very, very shortly. And Vikas, thank you so much for your time today. Really appreciate both these answers.
Yeah.
Thank you very much.